Hello everyone, welcome to the channel where we provide you with that financial education and information. Now in today's video, we're going to talk about two ways you can determine how much life insurance you need. Now the first method I'm going to show you is going to determine the least amount that you should get, all right? And the second method is going to determine the most amount you can get or the most amount an insurance company would allow you to get based on your income, all right? So let's dive right into that. So the first method is called the life method, okay? Life, and life is an acronym here. Okay, L stands for liabilities. And that's going to be all your loans, mortgages is included here. So any mortgage, credit card debt, any type of debt that you have, even if you owe someone personally, any debt that you have, anything that you have to pay, that's a liability, right? Loans, mortgages, etc., etc. That will go under L. So you're going to add up the total of all those. What's the total of your mortgage? What's the total of all loans that you have? What's the total of money you owe to people? What's the total of credit card, any student loan debt, all that. All your debts is going to be added up there, okay? Next is your income. I stands for income. And in many ways, this is what life insurance is about because that's the main thing. It's income replacement because you really cannot replace a person's life. When a person's dead, they're gone. So life insurance in many cases is really income replacement because we're trying to replace that income that's no longer there because that person is dead. So a good amount to have is at least 3 to 5 years of income. All right, this way the family can adjust to you not being there. All right, so they can figure that gives them some time, a number of years to continue to pay the bills, pay whatever need to be paid, and then kind of figure out how they're going to move forward. So either choose 3 or 5 years, okay, or 10 years if you could do that. All right. Next is F is for final expenses. This is at minimum what every person should do. And it's sad that a lot of times I run into families that have situation or have had a situation where their loved one died and they have to struggle to figure out how to pay for just the funeral. Like, forget about everything else. Like, the bills, the children, all that, but not even to pay for the funeral. They have to struggle to figure out how they could put that person to rest. Shouldn't be the case. So you should leave, everybody's responsible to pay for their own funeral. You should figure out how much that is and make sure you have that set aside to be taken care of. So all your final expenses. Next is education. Most parents do want to make sure that most parents, they help their children with education, okay? So this is a way to figure out the average amount for education these days for 4-year colleges is about 100,000 for 4 years, so 25,000 a year. So if you have 2 children, that will be 200,000 that you want to put aside for it, okay? So what does that look like? Let's just add that up. Let's say all your liabilities, let's say it's 500K. I'm just using numbers in this example here. It's going to be different for everybody at least, but let's just say it's 500K. And let's say your income is 100K a year. So 5 years, we're going to use 5 years in this example. That's another 500K. Funeral, the average cost about 15,000. Okay, we'll use the low on the average 15K. Education, let's say you have two children and your education cost is going to be 200K. Now, what you're going to do is add that up, and then you're going to subtract any assets that you have. So if you have brokerage accounts, savings, all that, any assets that you have, the value of anything, you're going to add that up. So let's see what that is. Right here is 1,215,000. Okay. Let's say you have 200,000 in assets. Okay. So you subtract your 200,000, and your need for insurance will be 1,015,000. So that's how you would figure out what's the least amount you would have. All right. You add up all your liabilities. You figure out how much income you would need, whether it's for 3 years, 5 years, or 10 years. Your final expense, you add that up, what that will cost, and your children's education, you add that up, your total, and you subtract it from assets that you already have. And that's the minimum you should get. In this case, $1,015,000 in insurance. Okay? The next method is called the human value, life value. It's called the human life value method. So in this method, you're figuring out what is the value of your life, and that's based on your income. So for example, 35 years old, if that person is expected to work another 30 years, then the insurance company will agree to insure that person up to the next 30 years of their income. So they use the income as their value. So how much money would this person produce if they were alive? So let's use an example. Let's say you make 100,000 a year, right? And you're a 35-year-old. At 35 years old, an insurance company will allow you to be insured for up to 30 years of your income. So therefore, 100K times 30, that insurance company will allow you to be insured up to 3 million. As long as you can prove that this is what the value is and you can afford the premium it will cost to be insured for 3 million. But that's what they will insure you. If it's a term policy, that's definitely affordable if you make 100,000 a year. But as long as you can prove that you can afford it, that insurance company will allow you to be insured for up to 3 million of life insurance. As always, I hope that the information was valuable to you. If you have any questions, feel free to leave it in the comment section. As always, if you liked the video and you thought it was valuable, click the like button. It's free. It doesn't cost you anything. All right? And share this with someone that could benefit from the information. If you haven't already done so, be sure to subscribe to the channel and hit the notification bell so that anytime I release a video, you're one of the first to be notified. And I'll leave my information there, so if you want to get a consultation for you to see where your particular situation is and what your particular needs are, I'll leave that link. You can schedule a consultation. Until next time, see you soon.